Hello there. Welcome back to Introductory Accounting and 4. Today, we want to look at a question paper of June 2023. This is the question paper that we want to look at today. And we want to look at question 7 on that question paper on the preparation of our bank reconciliation statement. So this is the question that we have, and you are required to spend, I will average 12 minutes on this question. The question reads, the following information appeared in the books of Muklish traders on 31 May 2021. Then we have given the information that were given there from 7.1 down. We go down with other information that we are given up to 7.9. And then beneath that, we are told to prepare only the bank reconciliation statement for the month ending 31 May 2021. Do not prepare the cash receipts journal or the cash payments journal. So very important to take note that we are only going to prepare the bank reconciliation statement, and we are not going to prepare the cash receipts journal and the cash payments journal. So we are just going straight away to the bank reconciliation statement, and to see that this is our bank reconciliation statement that we have, bank reconciliation statement for Muklish traders on 31 May 2021. And then we have a column for details and debit side and the credit side. So obviously we are going to start with the opening balance of that bank reconciliation statement. That is the opening balance that we're going to start with, is the balance that we are given in the question of the bank statement. So if you go back to the question, we can just go back to try and look at what balance do we have there that we are given for the bank statement. So if you go down the question, the information that we are given there, you would see that we have the balance of the bank statement given at 7.7. It's 7.7 here. That's where we are having the opening balance that we are going to start with in the bank reconciliation statement. It reads, the bank statement of Muklish traders showed an unfavorable balance of 48,963 rands on 31 May 2021. So very key is unfavorable. This is the key that we have there. So it means that if it's unfavorable, remember, in a bank statement, a favorable balance will be on the credit side of the bank statement. And when we are now in the ledger, in our bank account, in the ledger or the cash book, we are going to have an unfavorable on the credit side. So this is what we have there. So the unfavorable on the bank statement will be on the debit side, and then when we are now in the ledger, it will be on the opposite side, on the credit side. So we are going to start on the debit side with the unfavorable balance of 48,963, and so this is going to be on the debit side of the bank reconciliation statement. So if you come here, you'd see that we are going to start with debit balance as the bank statement. Debit balance as per bank statement. So this is the balance that we are going to start with, and we are saying it's a debit. So we go to the debit side, and the amount that we are given there, we can just go back to recheck the actual amount that we have. We have 48,963. So this is the amount that we are going to start with, 48,963. Then from there, we can check if there are any outstanding deposits. We can just start by listing the outstanding deposits that we have there. Then we go to outstanding checks that are there. And then if there are any errors that are there, we then include them beneath that. So we go there to check if we have got any outstanding deposits. We are told that a deposit of 19,694 on item 7.6, a deposit of 19,694 made by Muklish traders on 31 May 2021 did not appear on the bank statement. So this means this deposit was for May 2021, but it's not there on the bank statement, which means we have to update our bank reconciliation by putting this deposit that is outstanding. So we've got an outstanding deposit that we need to put there. So we can just come here and maybe indicate that this is outstanding. Outstanding deposits. not yet credited. So remember, whenever money is deposited in the bank account, on the bank statement it will be credited. So it's supposed to come on the credit side. We have 19,619. So this is what we have. And then we can go again and check if we have got any other outstanding deposits that we have in the question. So we can check with the information that we have there. You see that at the beginning there, we are told that the bank statement has already been compared with the cash receipts journal as well as the cash payment journal, and the supplementary entries have been made in the mentioned cash journals for May 2021. So this is done. Then we go to the bank account. The general ledger of Mukesh Traders showed an unfavorable balance of 12,970 runs on 1 May 2021. Then we have total of the bank column in the cash receipt journal is 269,000. We are also given for the cash payment journal, and these are the outstanding checks. The following checks did not appear on the bank statement, so these are outstanding checks. So basically, we are saying this is representing our outstanding checks. And remember, they should be on the debit side of the bank statement. So this is what we have. And then we check if we have got any other. We see that we do not have any other outstanding deposit that we have there. So we check for outstanding checks. Our 7.5, our 7.5. That's where we're having some outstanding checks. The following checks did not appear on the bank statement. So we are going to list all the checks that are there on the debit side of the bank reconciliation statement. So we come here. Then we say debit. Debit outstanding checks. And then we have got check number. We just list with their numbers. We'll go back to check their numbers. We have the first one is check number 002, and the amount is 2,456. And then the second one is check number 005, the amount 4,689. So the first one you are saying it's 002, and the amount is 2,456. Then the next one, we have check number 005, the amount being 4,689. This is what we have. Then we can check the other outstanding checks that we have. We also have check number 009 with the amount 3,265 rands. And also we've got check number 012 with the amount of 2,750 rands. So we can also include those ones. So we are now on check number 009. And we are saying the amount is 3,265. We go down, we also have check number 012 with the amount 2,750. So these are the outstanding checks that we have. This is the last one on outstanding checks. Then we can go on and see the other information that we are given. If you go to 7.8, 7.8 is the bank erroneously credited the amount of 79,560 to the bank statement of Mukesh Traders. The bank disclosed that it was a deposit made by another client. So what does it mean? This was a mistake. We are seeing that the bank statement was credited, but this amount was not supposed to be credited. It's supposed to be removed since it belongs to another client. So what do we need to do? This amount is on the credit side of the bank statement, so we need to go to the oversight and enter it so that we remove it, which is 79,560 on the debit side. Now we're going to enter on the debit so that we remove the amount that is on the credit. So we come here, and saying correction. Correction of a credit error. So this is now 79,500 and 60. Then we check the other one, that is maybe the last one. In May 2021, the bank statement of Mukrish Trader showed the check number 030 for 13,019 rands. On inquiry, the bank indicated that it was for another client who instructed the bank to pay ESCOM. So this one now is a payment. It's a check number 030. So it's a payment. It's on the debit side, and we are being told that it's also for another client. It wasn't supposed to be on the debit side on the bank statement. So by removing it, we are going to go to the credit side and enter it so that we remove the amount that is on the debit. So again, we go there and say, we go there and correct that error. So now we are saying to correct that error, we can just summarize as credit bank error. We are crediting to correct that error, and the amount is 13,019. So this is what we have. So this marks the end of the information that we are given there. If you go down, you see that this is the end, and having put those figures, we now have to balance to see what is the balancing figure. So what we are going to do, we are going to have a balance here. So we can just leave a space there. We can just leave the space there and put our double lines here. So what are we saying? If you add the total of the credit side, you'd see that the total of the credit side we are going to get, if you add the total of the credit side, that is 19,694. 19,694. Then we add 2. You add 13,019. You're supposed to get 32,713. 32,713. Then we also add the total of the debit. You're going to see that total of the debit, you're going to get 141,683. And that makes total of the debit the greatest total. So it's supposed to come here in between the double lines, 141,683. And it has to come both sides. And the side with the smaller total, that's where we're going to put the difference. And we say 141,683 minus 32,713, then you get the difference that you're supposed to put here. It's going to be 108,970. So this balance now, we are saying this is the credit balance SB bank account. Credit balance SB bank as a bank account. So we are saying it's a credit balance because remember our CD is on the credit side, credit side there. So it means our BD in the bank statement will be on the debit side. So if we have got our BD on the debit side, it means now in the bank account it will be the opposite, to be now a credit balance. So the balance aspect is described from where we are putting our BD. So in this case, the bank statement, the BD is going to be on the debit side, since we have got a BD on. So since we have got a CD on the credit, this is our CD. This is our balance CD. Our balance CD is on the credit. Then the BD will come to the opposite side, on the debit side, in our bank reconciliation. So the opposite is true now when we go to the bank account in the ledger. If our BD is on the debit on the bank statement, so it means in the bank account it will be on the credit side. That's why we are saying credit balance as a bank account. We are referring to the bank account since this is a bank reconciliation. Remember, on bank reconciliation, we are trying to reconcile the balance of the bank statement with the balance of the bank account in our ledger. So this is what we have in terms of the question of the bank reconciliation from June 2023. Let's still notified. Those who haven't subscribed, please subscribe and share. We are still coming with more videos. As for this video, I'm signing out.